All right, so let me take it from here. The reason why I asked that question is many people bought Shiba Inu. I think let me get to coin market cap. I want to use it as a case study for us to get something really interesting. Yes, engineer, give me your experience. Have you bought Shiba Inu?
Yes, I think
Okay,
that was I think late 2020. Yes, coming to 2021. And that's what
okay,
about. I think it was 7 zeros.
seven
Seven
zero.
zeros. Yes, and I
Okay,
bought $50 by then.
okay,
So when it was July 2021, then I sold it, and I sold it around I think $430 or so. Yes, if
okay.
I still
So
remember.
you got it from 500 and then you sold it at four something, right?
$50.
Hey, $50. Okay.
Yes, and I
So and
sold
you
around
sold it
40.
at 40. So you made
40.
$380. Is that correct?
Yeah, yeah.
Great. Fantastic. All right. Now, where is Shiba? My internet is a little bit lagging, but then let me take here Shiba. I want to use Shiba. I will use Solana. I will use Bitcoin. I will use Ethereum. All cryptocurrencies has that problem, and it is not a cryptocurrency maximum. Great. So many people got Shiba somewhere here. Some came out of it here. Then some more people also hear it from this area. The others heard it from the top. Okay. Now let's look at the zeros. Let's come to now. This is also a point where you can be able to use coin market cap or CoinGecko to do analysis, right? So all time low. Let's count the zeros. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, blah blah blah. All right. Now that was around November 28th, 2020. And Shiba gave us 17 plus $1 million, a million percentages. 17 million, right? Now, can we do a little bit of calculation here? You bought the project with $100 and it gives you 17, let's forget about the point 0.8. It gives you 17 million percent. How much do you make in profit? Who is going to do that for me real quick? So you just make it 17 million percent, okay, multiplied by 100. So probably $100 would give you $17 million. Right now, this is the question. Many people are hoping Shiba should get to $1 so they can cast all their poverty, all their financial problems in that particular single trade. So, yes, those who bought it here, they didn't lose money, but they couldn't catch the potential gain because of not greedy. They actually don't know the exit point before entering the market. They don't know where they should get out of the market before they entered. Now, to make yourself a professional trader, you always need to know the exit point for the trade before entering. So you don't enter the trade in the middle of the trade. Today, someone was calling me on WhatsApp call. I didn't mind the person. I actually just realized the question the person was asking on WhatsApp. He's asking me, holding a trade, if he should close the trade or not. Those questions, I don't answer them. Because one, before you even enter the trade, I was not there. I don't know the parameters you've seen. I don't know what encourages you, what decisions made you buy into that particular trade, right? Now, let's take Solana. Solana also had similar example. Anybody here bought Solana? Solana. Where is Solana? Um, yeah. So we look at Solana. Solana is also the same. Get to $250 and make a U-turn, right? So all those who bought it somewhere around $31, yes, they will be crying and be praying hard. They will go for all night. They will go to their mosque and be praying, oh, go back to 250, go back to 250. But the time it was even returning from 250, they could sell at 200 and make all the profit they supposed to. They miss it, right? The interesting thing is this. Once you miss it, you will hardly get it again, whether it's the same asset or a different asset. So let's take notes. Let me give you the last example before I mention BTC. I'll mention ICP, Internet Computer. Okay, this is one of my projects I'm holding this year. I'm expecting it to do some interesting thing in the coming days. Great. Now, this project also went as high as 461 and drop to where it is now, right? So when you want to go into anything trading, be it forex, be it stock, be it commodities, special metals, crypto, what have you, please, how much you are entering the market is very important. The price you are buying into the market is very important. Your expected target is very important. Your expected loss is very important. Are you going to take the profits on gradual process is very important. Will you wait for price to just get to your target before you close the trade or you sell off is very important. All right. Now, after learning the skill of trading, the last thing is what I'm telling you. And it happened to be the most important thing, right? Now let's come to this data. I want to see if I can get some information from here. Um, Liquidation, great. Yeah, I've seen it. So yesterday, the total liquidation in the crypto space alone is about 56 million US dollars. The 56 or 500 something million US dollars. Now, the people who lose the money yesterday, some of them make decision when the market is ranging, and some of them also bought when they're supposed to sell. Some of them sold when they're supposed to buy, and all those data were available, right? This is lagging, so I'm just going straight. Okay, I think it's great. Right. So this is for today. This is for today, past 24 hours. All right. So Bitcoin liquidated 84 million US dollars, right? The lowest was $1.4 million. Arbitrum alone took about $3.3 million. All right. Now, basically, the total liquidation is $190 million. That's just within 24 hours. I checked this yesterday. The figure was different. Within 24 hours, this is what people lost. Now, out of those people, you can see those who go for a buy, those who go for a set, a short or a sell. All right. Now, the platforms they traded, Binance got 64.5 million. The lowest exchange got 1.9 million, right? 1.9 million. Now, what I'm trying to let you understand is that at that particular point, it is not the market, it's the people. Okay, so let's go to BTC. Now, what happened here is that great. So I've those who listened to me yesterday in my other class, they would have been able to make money. Now, those of you who listened to my voice before we draw this analysis, you remember, I think engineer, you are there. Maybe you remember this pink line. When I said
Yes.
some time ago, it's an important line. Okay. That pink line validated a sell for us. I think I drew this thing in this class, the previous class. That validated the sell before BTC came down. So it was not a surprise for us. Should we be in class or should we take that trade? BTC will not be a surprise. Now, yesterday, this same analysis we've done already is this same analysis that played out nicely today. Now, many people that will be liquidated in this trade, you know their problem? Their problem is that they couldn't see, let me annotate so you guys get everything point by point. They couldn't see this as a place they could take profit one, take profit two, take profit three. They will be chasing, oh, it will go back to 31,000. That is the mindset. Because they said it will go back to 31,000 and they bought around 29,000, their stop loss might be around 28,500. All right. Then there's a fundamental analysis in the market. So this fundamental analysis in the market, whether you like it or not, when you understand technical analysis and you make projections, you will catch this trade or you won't trade at all. So if you want to make money and be a consistent trader, you must always understand where to buy, where to sell, when to come out, okay, how long you should hold the trade. It's all part of the game. Now, this is a perfect analysis, and then I take the trade. I didn't set stop loss. I didn't set take profit. Market will go, and I'll still be in loss. I think yesterday price was here when we spoke about this particular asset. Price was where I just circled or somewhere around there. Price was there, and then make some push ups to the top and come down. Right now, please, as we are all learning how to trade, I know some of you will be trading crypto. All right, some of you will be trading metals like gold. That's what I do mostly as well. Some of you will be trading stock like Facebook, Apple, and so many of them. You must always understand that don't just make decisions on speculation. Do not just make decisions on speculations. Make decision with an evidence. Make decision with an evidence, right? Now today, this is good. A little bit of a fundamental push happened. Right, today we didn't trade. Myself, I didn't trade gold. But yesterday we had about 100 pips, which is good money. And gold came into the whole scene to clear around whatever we analyzed. And then it's still within that area, right? Now, these are the ability of projecting the market. Now, in the video, you heard logical. This is the point where you need to be logical. This is the point where psychology comes in, right? at that particular time, Mark is not there to tell you buy or sell or this is how it is expected to go. But then you look into the market, you project the market, you forecast the market, you get the nature of the market, and then you make meaningful decision out of it, right? So these are very important. It looks fundamental, but it's very deep because without you setting these things, you will think, oh, the market doesn't like me. You will think, oh, my family witches don't want me to be successful. You will think someone is chasing you for your profit and all those stuff, right? There's no spiritual attack in the forex market. It, it's all based on your logical mind, your statistic ability, the probability nature you have, right? But do not base profit and loss on probability. Base it on technical analysis, right? Then you back it up with fundamental and sentiment analysis. With all this put together, and as we are transitioning into technical analysis, you will be able to take charge of the market, right? The ability of taking charge of the market is the most important thing, and that will define you as a trader, all right? Now, let's go into risk. Let's go into risk. Let me come to this area. All right. So when we come to risk, let's say you have $100 to trade with. I'm typing 1,000. Okay, let me make it 100, 1,000, and 10,000. Now, anywhere you find yourself, please, this is the rule. If you're not writing anything, write this one down. The rule is that before you finish, so before you exhaust your money, which is your equity, okay? Make sure you trade 100 times. Before you call yourself or tell yourself that I have blown my account, just make sure you trade at 100 times. Now, what does it mean? It means that per trade, you are risking 1%. Probably. I'm going to break this down. I'm going to break it down in another way for you to get where it is coming from and where you will be when you follow it. Now, how will you trade with $100? 100 times. In currency market, it's possible because you can take a lot size of 0.01. Okay? And take a lot size of 0.01 and even hold a trade to a stop loss of 100 pips, which is equivalent to what? $1. Sorry, 10 pips, which is equivalent to $1. Right? So multiply by 10 pips, which is $1, right? As stop loss. Okay. Now, this is the interesting thing. When you are trading with such an amount, the beautiful thing is that, or what you need to know is that you just need to always put your analysis in a way that market will not go a little bit lower than your expectation. Definitely, if you are trading $100, you might not be a day trader. You might be a scalper and or a day trader or both, right? Because you are actually growing your equity in a strategic way. you have a special approach you want to use, right? Now, let's say you are trading with $1,000. I made a mistake here. This is 0, 1, right? So let's say you are trading with $1,000 and you are still doing the same 1%. Okay, so you'll be using a lot size of 0.1. Okay, so if you're also targeting 10 pips, that will be what? $10. $10, right? But someone can decide using $1,000 and go with 0.05 and give more room to his or her stop loss so that market can breathe. Someone who also said, I'm using $1,000, but I still want to go with what? 0.01. So I can give a room to 100 pips. So it means that that person trading with $1,000 can use his equity for a swing trading. In fact, even a position trading. All right. So the rule says 1% per your equity in a trade, but it does not slave you to add logical reasoning to your equity and your style of trading. All right, let's break it down. So 1% of your equity, which is lot size with $10,000, will be of 0. That will be 1.0. Okay. So 1.0, 1.0. Let's say 4 times 10 pips will give us $100. Right. Now, this is also another point. Somebody will be trading with a 0.1 on $10,000 account to give him maybe 1,000 pips or 100 pips briefing space in the trade. Now, at this particular point, it's now based on you. How would you want to apply the 1% risk per trade rule? How will you want to apply it? How will you want to go about it? Are your analysis 100% and perfect that a 10p profit will not hit within 10 seconds? If all these curriculums and understanding goes with yes, you can still get your 1%. But we are talking about losses. But when it comes to the redefinition I want to add is risk according to your number. Yeah, risk according to your number. So what is your number? Your number is your expenditure divided by 3. 1% of that becomes your number. Now, this is the question. Let's say I dash you in the chat box, please. Let's say I dash you a $10,000 to trade, or you have a $10,000 to trade. You are in Ghana. Let's assume you are converting your $100 to Ghana cedis. Are you sure you will not feel bad or it won't pain you when you lose $100 as like a day? You lost $100 out of that. Per equity, there is no problem. But what of your psychology, your ability to spend? Are you comfortably willing to just give the $100 in peace and still be okay? That is the question you will ask yourself when you want to risk the 1%. Because the rule is not to get emotional. The other rule is not to be overexcited. When you're emotional, you'll make wrong decision. When you are overexcited, you make what? Wrong decision. So engineer is saying that I won't give it out just like that. So it means that engineer will be trading with a $10,000 account, but based on his expenditure, he want to lose only what? $35. So it means his expenditure might be $100 and he's only ready to give out $35. Now, because he spent $100 a day, he won't feel so bad to lose $35. And because he spent $100 a day, he won't be too excited when he make $200 profit a day. Guys, are you guys following? I want to redefine your trading for you before you start to. Okay? Like I told you, you are better than me because 4 years of errors, you are going to use it 4 months to fix yourself, right? Now, this is the point. Let's say you are somebody who has $10,000. Yeah, maybe it's free money, but your expenditure is as low as $30. Please, 1% risk is not for you. Just assume that you are losing $10 per trade. Now, that $10 per trade, divide $10,000 by 10 and see how many times will you trade before you lose that $100. Let's assume you are just a bad trader. Every day it doesn't work. Tomorrow you go, it doesn't work. The next day you go, it doesn't work. Let's assume how many times will you trade? You lose your money. It will take you a very long time. And please, won't you stop at a point to correct yourself why you are always losing trade? Yes, you will. If you accept this fact, I can even start giving you signal tomorrow on your life account, and everybody can make money. And this is the problem emotion, risk management, emotion, risk management wants to solve. All right. If you're losing money in trading already, please, this is where you are. All right. Now, when you are trading with $1,000, the same rule apply. 1% of $1,000 is $10. So personally, I do spend probably more than $20 a day. All right. So it means that I will just be prepared to risk 7 pips, or I'll be preparing to use $7 in a day. I won't feel it. If market hunt it, I won't feel it. It also means that if Nasi market hunt it and I enter again and I enter again, which is $21, I will still not feel it. There are points in time where you enter the trade and it will hit stop loss immediately. All right. Then the setup says, okay, enter again. All right. Once the setup says enter again, yeah, we still enter. Sometimes we enter the fourth time before it goes in our direction. Funny enough, before it goes in your direction, it will go like very smooth and give you a lot of pips, more than the one you lost. But because you did not manage your risk from the beginning, the time the market is moving, you are already losing like 75% of your equity. Nobody does business like that, right? So you need to understand these rules. Even if you are trading with, let me just go, let's go a little bit higher, right? Let's say you are giving $1 million to trade. Are you telling me that you are comfortable of losing $100,000 or $10,000 because the rule says risk 1% of the equity? Somebody should tell me the truth here. Definitely it should be no, right? Exactly. Definitely it should be no. All right. So the rules are there, but personalize the rule. Put yourself in the rule and ask yourself a question. This rule, they said, jump over the fire, and you are wearing nylon, and you know that you don't have proper jumping skills. Me and you, we are lazy like something. Then you say the rule says I should jump. Me, I will go and look for another way to go to where I'm supposed to go. The most important thing is to get to my destination, not to forcefully jump over the fire, right? Or you are jumping over water and you can't swim like me. I will find my way around. I'll go and look for a way. If you take me extra 20 hours, I better than fall into that water and I can't swim. The same thing should apply to your trading skills. Right, guys? If you accept this, like I said, we've solved every problem that you could face in your trading journey, right? Now, this is not all. Let me break it down again. At this point, you apply something we call R. Okay. Now, what is R? It is risk to reward ratio, right? Risk to reward ratio, right? This is what risk to reward ratio is. Now, the risk to reward ratio, it becomes the shielding agenda for your trading journey. Do not risk 1% and take profit 1%. Please, this also has to be based on your technical analysis. If your technical analysis did not give you the ratio trade, don't go and do your imaginations and your mechanical factory and tell yourself that it's risk trade. No. Your technical analysis should be able to prove that you are going three ratios, right? So R1 to 1 is out. So 1R. Whenever I say 1R, I'm just telling you you are risking 1 to gain 1. When we say 2R, okay, let me mention 1.5R because it's common. We mostly do 1.5R. Okay. So 1.5R means I'm risking $1. I want to get $1.5 back. That's 1.5R. 1 is to 1.5R. All right. The 1 becomes fixed. We have 2R. We have 3R. 3R. We have 4R. Then maximum 5R. Some magicians can say 10R. All right. Great. Now, please, this is the interesting point. Now, the interesting point is this. Let's say your analysis always go with 3R. You always risk $1 and then you want to make $3, right? Now, when you risk $1 and you want to get $3 and you hit one trade hit your take profit, it means that you have $3. Now, this is the point. You may enter a trade and the trade hits stop loss. You enter again, it hits stop loss. Then you enter the next one, it hit take profit. That means you have 3R. 3 minus 2, you still have 1R profit. So when you go again, maybe you lose. You are now break even, 0, 0. But if you were to use 1R, oh, I reached $1, I'm getting $1. Yeah, I don't want trouble. Oh. You win. Then you lose, you lose, you lose. 2 times. You'll have negative. You still have negative. You lose, you win. You still have negative. But with 3R or 1.5R and above, technically, you're not on assumption. You can lose and lose and lose and lose and lose. 1 win or 2 win or 3 win will still make you a better trader. That is why you need to get high probability and high profitable trading setup before you enter the trade. That is why when we come to technical analysis, we break it down. Anybody who enjoy my private class here will tell you, we break it down so that you can have any means to be able to get profitable setup and high probability setup. When you get high probability setup, you can even get like 6 hours in a trade. That's when you see us giving you TP1, TP2, TP3, TP4, TP5. There is a mechanism that gives us that TP1, TP2, TP3, and whatever, whatever, whatever. All right. So risk management. Now, when we take this point, as far as this risk management is concerned, you are already becoming a consistent, profitable trader. You're already becoming what? A consistent, profitable trader. So you can easily double your equity, triple your equity, whatever, is it four pole or fifth pole or sixth pole or whatever, your equity, right? You can stay in the game for a very long time. I mean, you can stay in the game for a very long time. It also means that your ability to move $100 to $1,000, you will only going to maintain your rules. A lot of people trade with $100, they get to $1,000, then they can't climb up and they lose all. Why? There is no governance. There is no set of rules. There is no mental work. There is no planning. There is no agenda. There is no reason. You don't know how they grow the $100 to $1,000. Hence, you can easily lose it. So when you start the game, if you're already in the game, please correct your mindset. All right. When you start the game, at least I enter Euro USD at 1.325 with the confirmation of engulfing candlestick in assumption of a support. I bought with a confirmation of maybe moving average 4 and 9. And the setup was equally validated by 200 exponential moving average and 50 exponential moving average, probably giving me a golden cross strategy. Hence, I bought with risk or lot size this. And the trade went well. Then you write a remark. I will always get this confluence whenever I am going to make such trade on Euro USD. The other one is, and the trade did not go well. The fact being that market pulled back, come and hit my stop loss, and now go in my favor. What is wrong? Then you go back to the chart and ask the chart, what is wrong? The chart will tell you, I was actually preparing to turn, but I did not give you any chart pattern of turning. Oh, I was preparing to turn, but a fundamental analysis came in. Hence, the trade hit your stop loss. Then you will now advise yourself and make a small note on the other side. Anytime I want to take a trade, I will look for a confirmation setup to be able to know if it is a continuation pattern or a reversal pattern. Or I will go to the news portal and see if there is any major news in the day and I'll prepare for that news. Or I will go for news aggregating website and see if there is any sentiment once I am in the trade. Which means that the next day you are going to build on your trade to become a better trader. And you note it down. That is called trading signal. Just like those who drive company cars, they have a logbook. They put this trip where they buy for this in it. So anytime they request for your logbook, they have information about how you utilize and use the car. Same applies to trading. Now, when you are doing these things, let's say you start demo and you are doing it now, the opportunity for you is that you can easily qualify for a proprietary firm account where maybe a company will give you, oh, $10,000, $20,000, $100,000, $1 million, manage it. Whenever you make a profit at the end of the month, we are taking 10% or 20%, the 80% is yours. But if you don't have all these things, you are not even qualified to call yourself a trader. All right? So this is very important, and take everything as far as being a profitable trader, consistent profitable trader, long-term profitable trader. You can start a journey without even losing your money. Even if you are a newbie, you put this into your plan. Then you finally develop a trading agenda, trading plan. What assets do I want to trade? Now, you may not actually be able to know this from the onset, right? But as you are trading demo, there is one asset that when you take it, you will feel so comfortable, like so relaxed. Once you meet that asset, that is your asset, even though it's them. Or let's think about this. You are always receiving signal. Maybe you are taking my signal and stuff. Then that signal came and you feel so cool with it, like you don't fear, you don't even like everything is calm with you. That is your asset. Then you learn that asset. What moves that asset? Which country is behind it? Or which country is that asset? Which country support its movement? What time does it move well? As you know all those things, you will define the type of trader you want to be by session. Okay, I trade Australian dollar USD. Australian dollar is ahead of US dollar so and so time. When their market opened, this is what happened, right? So I actually my market move around 12 a.m. That 12 a.m. will I be awake? Right. So what happens when we do the reversal and see when New York market open, how will Australian dollar behave against US dollar? Okay, I get the reason why it will go this way. Then I'll be trading at 1 p.m. That is when you get your trading time. It will not just come like magic. Then you're like, oh, okay, now I learned how to trade Australian dollar. Which asset or currency pairs do Australian dollar correlate with positively? And which of them does it correlate with negatively? You check their conditions, say, okay, I'll put them on my watch list. Why? Because if a currency correlates with another currency, it has direct or indirect effect on that currency, which also means that whatever that is happening in that currency might affect decision you are making in your currency, which you are not even trading. Correlation is also very important. And you put all these things together, and you design a nice plan towards it. Then you get that time where you don't trade at all. You sit and watch how the market is behaving, how the market is reacting. You draw a support and see if market will respect the support. You draw a resistance and see if market will respect the resistance. You draw a resistance zone and see if market will respect it. A support zone, you draw a key level and see what will happen in that key level. You draw a certain rectangle just to see how market is going to be swinging within that rectangle. At the end of it all, you become a good trader. All right. All right. So my fall is finished. Thank you so much for your time.